Hey everybody, Brian Shannon here from AlphaTrends.net. Today is Friday, the 9th of January 2015, and the first full week of the market is closed for 2015. And let's take a look here. We had the S&P 500 was positive on Thursday, so for the first 5 days, officially we did have the January barometer indicating strength. For those of you who aren't familiar with what that is, just Google January barometer. It's different than the January effect. Anyways, the S&P 500 lost ground today, and now year to date we're down 0.66%. The Nasdaq, pretty much all the equities are down except for interest rate sensitive the Russell 2000, but the IYR, which is commercial real estate, and then we have biotechs, which are also up 3% year to date. As you know, I got rid of gold. Gold is up, and hopefully I'm the contrarian indicator, and people can point to me and say once he gave up covering gold, that's when it made a bottom, because gold does look like it's ready to move higher from here. But the dollar had a strong week, and bonds actually had a very strong week as well. So let's take a look. When we see this daily chart of the S&P 500, basically what we're seeing here is a mess. We've got a declining 10 and 20-day moving average, the 50-day moving average, all kind of in this same spot. So what we want to look at, of course, are the trends. And on the 10-minute, let's start actually with the 30-minute time frame. We had a gap up above the five-day moving average, and the 5-day moving average is still declining. So today we saw this market pull back, and that's what I told the subscribers last night, that we were hoping we could see a pullback down towards 204 to 204 and a half, and that it would stabilize in this area. Right now, though, for today, you can see that we did close not near the lows, but close to it. We did find a little bit of a rally here late in the day, and it was interesting. Where it found resistance was right at the 2-day volume weighted average price. That's important because that's the level since that gap higher, the average price since that gap higher. So in other words, the average participant who has purchased is losing money. The average person who shorted after that gap is now making money. And year to date, the volume weighted average price down here at 203. So next week, I think we want to see, really, this is going to be the key band of support we want to see hold, 202.5 to 203. It was prior resistance here, and hopefully that will turn into support to help this market turn back around if it can. But the daily chart is really a mess. It's not indicating that anything's really going to be able to trend for very long until we can break this range that it's in right now. And obviously a break to the downside would not be a positive. So I think for next week, when you're looking at this, we have to look at it as still a very difficult environment to put new swing trades on, long or short. But we're starting to come into earnings season, and there's all kinds of catalysts that will change things for individual stocks. As always, you're best off trading the stock that you're trading based on what that stock is actually doing. The Nasdaq dropped down to the $100 level, just slightly below it, and took out the lows from December, but recovered nicely here. And where did we recover to? Well, back up into an area where we have found a little bit of resistance at an important prior level here, and now we're pulling back, and we'll want to see 101.5 to 102 hold as support for early next week. If that fails, then I think we see another test of the 100, and looking at that 100 level, it could be pretty ugly if we get below there, because we would have a pattern of lower highs and lower lows below what we have now is a 50-day moving average that's flattening out, but it's very indecisive for now. So I suggest you go slow, small share size commitments until we get a little bit better resolution of what this market actually wants to do. The Russell 2000 had broken resistance late in December, and then we fell back below that this week and stuck below that as well. The volume weighted average price year to date is just below at about 117 and a quarter. So I think for the Russell, we want to see 117 to 117 and a quarter hold. If that can happen, then perhaps this market can rebuild and be out of danger and break beyond this week's high. But going into next week, take it very cautiously. Same goes true for the semiconductors, which they hit their measured move objective corrective and bounce from there. But we do still have on this daily time frame for now these lower highs and the lower lows. So looking at a 30-minute time frame, we're trying to stabilize here at the 5-day moving average. That's good to see. I think next week we want to see 53 to 53.5 hold. That's our key band of what should ideally be support. If that's broken, then we're going to be looking at a test of these lows and perhaps even lower. Financials, we're down 1.3% today, and on a percentage basis this week, they had a real rough week. Only oil was worse. They were down 2.39%. So the financials got back up to the 10 and 20-day moving average conjunction, and here we are. The bigger important level is obviously going to be down near about 23.75, and that's where we've seen a little bit of support. So the bigger important area is 23.75 to 24. If we break below and hold below that, then I think you want to get very defensive, not only on the financials but on the S&P 500 as well. As I mentioned, biotechs are what we're going to cover instead of gold, not because they one replaces the other, but just instead of covering gold, I feel that biotechs are more speculative and have more influence on the market overall. And these are the big biotech stocks. They're obviously going to be much different than the little speculative biotech names that people like to get involved in. And here's the danger of biotechs. You get some news, the stock gaps up, and gaps up from earlier, at the beginning of the year, this stock was $7 a share. It ran up to close to 12, and then today, who knows what the news was. I'm not going to waste my time reading it, but the stock gapped down, and now everyone who's bought it is obviously in a losing position. The big biotechs, though, are more obviously they're more established companies, shares like stocks like Amgen, Biogen, etc. Anyways, this group is hanging out right up in this little band of resistance at all-time highs. So breaking beyond 320 continues this rally. There's no reason to think it shouldn't. I think that if it breaks back below 310, which you can see, we saw a little resistance there. That resistance, the biotechs gapped up, they pulled back. They've held that for now, and we've got a rising 5-day moving average. So as long as the biotechs remain above 310, this remains the stronger market group out there right now. The dollar just continues to chug higher as well. There's no sign of this market trend slowing down. It's higher highs and higher lows. Anyone who bets against it, in my mind, is a fool, because you've got the upward momentum, and we've still got that rising 5, 10, 20, 50-day moving average. Bonds also, remember again, we were talking about how foolish it was to call this a double top just because we backed off of there. We ran to new highs this week and closed real close to them also. So the bonds continue in a strong uptrend. Intermediate term, I think 129 is the key level that we would ideally find support. I'm going to talk about gold real quick because I do think it's looking like it's poised to get going, and especially back above 119. So someone said when I posted that I'm giving up on gold, that you're wrong, whatever. I've been dead right about gold. I've been calling it guilty till proven innocent for the last 3 years. And if you notice, when I talk about gold, I always have this tone of negativity. I just don't like gold, so why talk about it? Why drag anyone else down? Maybe you like gold, and if you're a gold bug, I hope it soars for you. Anyways, that's all about gold. Apple, I don't know why that line is on there, but Apple is still trying to find its footing after that new high that it made late in November. But we have a pattern of lower highs and lower lows. It gapped up above that 5-day moving average and pulled back in here a little bit today. Ideally, I'd like to see Apple kind of consolidate in here, have that 5-day moving average catch up to it, and then perhaps we can start thinking that maybe it's poised to get moving again. But for now, I think it's just a little too dangerous to really be looking at in terms of an intermediate term trade to the upside. Amazon's a stock where the pressure's been building on this thing with these lower highs, and it keeps coming into this band of support. Amazon, I'd be careful with. It's still it's stuck below the 10, 20, 50-day moving average. We've got a 50, 100, 200-day moving average all declining, and year to date, the buyers, the shareholders aren't faring so well in here. This is the volume weighted average price in Amazon, so be careful with that. We'll take a look at Apple just to show you where that year to date volume weighted average price is at about 108.75. A couple other names. Data is one that I think looks like something could be happening in here for another continued upside. We've got a real nice pattern of higher highs and higher lows in this stock. And looking at the 30-minute time frame, you can see we got back above that 5-day moving average. We pulled back nicely. This is going to be a key level of support down near about 85, but I keep an eye on this one next week, in particular if it can get a move above here. But it's important how it gets above there. If it were to gap above 88, I wouldn't buy it. If it was to run up, pull back, create a higher low, and then go, then I would be looking to buy it. That's something we talk about constantly in Alpha Trends in the chat room and on the daily stock trade ideas. Google continues to be an issue here. We saw a couple weeks ago that it broke down. I was thinking maybe from that failed move could come a fast move higher, but we did get a run right up to the 50-day moving average, and it's been backing off from there, and it's showing an inability to really rally here. So be very careful with Google as well. I think you're going to need to see it back above 510 just to become neutral in the intermediate term. The sellers are in control there. They're also in control of GoPro. The volume weighted average price since it came public right here at about $63 a share, and it remains in a downtrend. It's below a declining 5-day moving average. With it's going to need to get back above 63 just to become neutral, and probably going to need to get back above 70 to become bullish once again. Netflix is another one that looks like it's having trouble here. You can see that weekly time frame. It's at potential support, but potential support is just potential. Anyways, we've seen it trading in this area, but going into next week, it's looking like a little bearish flag, and this is one of those stocks that can provide overall leadership to the market. So breaking Friday's low, that is today's low at about 328ish, then that could lead to further downside. And Netflix, Tesla's losing ground as well. Tesla's stuck below declining 5-day moving average, and it's below that 10, 20, and 50-day moving average. It's below the 200-day moving average as well. So the best days for Tesla are behind it for now. It doesn't mean it can't reset up again, but the sellers are in control of this stock. And Alibaba, we've got in this stock, we did see it bounce back above the volume weighted average price since the stock came public this week, but it's certainly not an impressive pattern. We still have a pattern of lower highs and lower lows. So Alibaba does not look safe for new purchases in here. Year-to-date volume weighted average price. We'll want to see, I think, 102 to 102.5 hold as support next week. Otherwise, there could be trouble for Alibaba. That's it for today. Hope you have a good weekend. Thank you.